Hi traders, this is Adam House, Senior Account Manager with Forex Capital Trading, hosting the Daily European Open webinar for this Friday, the 11th of the 8th, 2017. Short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice, and Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, we've got a whole heap happening on the market at the moment in relation to risk events. The key focal point for today is, of course, the political situation with North Korea and US relations becoming increasingly unstable. And we've also got the USD CPI index coming in later today at 2230. Now, that will provide some further cues on the Fed's stance to increasing interest rates, of course. We've got expected year-on-year in July and year-on-year for the ex-food and energy at 1.7, 1.8% respectively. Now, any higher than that amount, if the forecast comes in, would normally be taken as bullish for the US dollar, placing more pressure on the Fed to raise rates. Now, it's not as simple as that. You know, the Fed is looking to stabilise rates around about the 2% mark. So many analysts are saying, especially from Bloomberg and Reuters, that if we get expected worse results than what is advertised there at 1.8 or 1.7%, then that will place less pressure on the Fed to actually raise rates. And we're looking at a September rate hike as being around about the 40% or below, or probably being downgraded from 40% to 30% or below. And then a December rate hike looks even less likely than that. But we've had a hell of a lot happen on the market over the past 24 hours since we last spoke. The Aussie has seen a huge amount of pressure today. We opened up around about the 78.70 mark, but there's been a broad sell-off of the Aussie, as has the ASX today. ASX has shown a massive bearish candle today. Obviously, there's risk-off flows happening from that, intensified by ongoing geopolitical tensions between the US and North Korea over the missile threat. The Aussie was the worst hit, but it's also faced a double whammy from risk aversion on the other hand. But while Governor Philip Lowe's jawboning on his economic outlook statement this morning really dented the sentiment around the AUD as well. So the best performers on the market generally have been gold and the yen. As we said yesterday, on that expected volatility around the missile threat, we've seen gold sort of meteorically rise throughout the course of today. We spoke yesterday, we were trading at around 12.74 marks, jumped a good $10 overnight. We're starting to see some minute sort of bearish pressure starting to ensue. But fundamentally, look, the outlook still remains the same. Trading Central have got targets of 12.97 in extension on gold, currently trading around about the 12.84 mark. Got continued bearish pressure on the Aussie, obviously around the Asian session being generally bearish today on the threat of a missile attack. Correspondingly, we've got British and Euro being quite strong, or actually holding ground rather, against the US dollar, which is quite weak. Hasn't been a terrible lot of movement so far, but obviously most of the volatility would happen around the 4 or 5 o'clock mark anyway. So we'll wait for the open of the European market. But there could be a little bit of consolidation ahead around the Euro Open and especially around the London Open. Obviously, with respect to the CPI figures coming out at 22.30 later today, they're really going to eye down those figures, and they're all going to eye down the CPI figures coming out at 22.30. So really, what it's all about is sort of focusing on that announcement. As I said, if we get worse than expected figures, which many analysts are saying that, then it could place further bearish pressure on an already weak US dollar. Now, that would be a double whammy, considering all the bearish pressure on equities generally. And we're really seeing sort of that being a double whammy. Now, many analysts are saying sort of, you know, taking that on board, that we could look at further targets of 108.50 or even 108 in extension in the short term, and looking as high as 1,300 for gold, or a recent high in the market around about 12.95. So this is all assuming that that data is actually correct. And there's a lot of supporting data to actually, you know, conclude that despite strong NFP data, that we would expect weaker than CPI figures. So no one knows absolutely for sure. Okay, so if you are trading around the event at 10:30, please mitigate your risk and obviously use your proper protective measures in it as well as your stop losses and take profits. So we will also look at 10:30. We'll also look to retailers report earnings as well, but the main one obviously being the inflation data. And really what it's all about is there'll be some short commentary afterwards in terms of whether it's transitory or a longer term problem. But the market might already be starting to price in the fact that they're actually expecting weaker than expected results. The other sort of point to note as well is that we're seeing increased volatility on gold to the upside. Now, if we reach the 12.95 mark, we can go back as far as the 6th of the 6th, where gold actually reached the top in the market at 12.95. And we see a channel down here at 12.03. So ultimately, a lot of investors are actually seeking to probably aim for a top on the market, and then that will be the defining level at 1300, 12.95 to 1300, in which we may see a daily reversal. But in today's geopolitical scene, where it's very unexpected what's going to be the next result, when's the next missile attack, and when is the next mud flinging going to occur between the two dominant powers, no one knows. But if it is expected to continue and we do get a surprising announcement, then by all rights, gold and JPY as safe haven assets fundamentally would actually be seen as being flocked to provide some sort of stability in an otherwise turbulent environment on the equities markets. So bear that in mind, okay, folks, is that, the overall sentiment is bearish today on the US dollar, probably bearish on the Aussie as well, because that's following suit. Obviously on a very bearish day for the Dow Jones overnight. A lot of investors were actually seeking to sort of look for that top in the market, record highs for the Dow, but overnight we saw this massive sell-off, and that's broadly transposed into this weakness on the Aussie dollar. Further Dow pressure is expected to continue, just on that uncertainty as well. But obviously our own index, the ASX 200, has followed suit. So, folks, hopefully that's provided some clarity for you in terms of where to focus your efforts today. We trading the probabilities as such and mitigating your risk as much as possible. If you were bearish on the US dollar, sort of looking for further targets on a daily chart here of around about 108.80 and 107.50 in extension just down the bottom here, and even closer to 107, but that's a bit of a longer term target. But the CPI generally has created big moves in the market. Usually the NFP created about a 90 pip spike in the market, and it's not unreasonable to assume that the CPI would do the same, because obviously CPI is such a closely watched measure when it comes to general sentiment about whether the Fed are going to be dovish or hawkish on future rate increases. So just remember, if we get some negative figures coming out, generally that places a bit more of a dovish stance on the Fed to not raise rates, okay, to combat the lower inflation that came out, which could spell, sort of equally bearish pressure for the US. Okay, that's the main message of today's webinar. If you have any questions about that today, or any other topics on the market, or anything else about your account, then please get in contact with your account manager, and we'll be happy to assist you. In the meantime, thank you very much for your attendance. Have a great weekend, and please remember to mitigate your risk, and happy trading to you all. Thank you.